What is going on, guys? Good morning. Good morning. Hopefully, got all the what's up, JB? Got the morning trading out of the system, ready for the lunch hour, and time to prep for the rest of the week. So, actually, I was a little bummed, man. We had this major relief in terms of lack of data last week, and kind of looking at the calendar, I'm like, man, cannot get a break. So we have a ton to go over this week for sure. Um, one thing really quick, also happy Easter to everybody. We are doing a little Easter sale. So if you'd like, head over to papergains.com. Let me see if I can get this. Believe we have a what is this? Yeah, paper on the top left, papergains.com/links. There's a link to our group if you want. Don't really ever run sales, but figured it'd be a nice little festive time. So go ahead and throw this out there. This is 20% off any of the packages for sure. So if you want to see how we do, what we do, actually get in the weeds with us, stream every day live. And yeah, it's a ton of fun, big family. Um, and absolutely love the group for sure. So that is that. Let's go ahead and get ready. You can go ahead and retweet this if you can on Twitter, or subscribe, like to the video, send it out if you want. If you can, that's always super helpful. Try to hop into some of the comments later on too. So let's get rolling here. All right. So every Monday we do a quick, recap. What was major headlines over the weekend? What are we looking forward to this week? What's on the economic calendar? And we'll try to highlight a couple different trades as we go through this as well. So we approach trading very much like a business. So we want to basically calculate, what are we looking for? What are kind of some of these upside expectations, and what are the catalysts and price levels really that we have to see in order to keep some of this trading logic going. So if you guys can, in the chat also, I'll see it. I'm not showing it right now, but if you have any tickers, I know we have a couple. Some of the guys were looking for guys and girls looking for Target. Definitely Tesla will be on watch. And I have a big one too. I think, some of these things are starting to look really good on a weekly chart perspective, and I'm liking some of these pullbacks too. So we'll go ahead and get into that. But before we can, really just basic recap what's going on. Alex here, I'll just put this up. Uh, what's up, man? So basically, over the weekend, we got a couple headlines. I think Jamie Dimons was one, probably the most bearish note out there. Really just kind of warning that, hey, look, he thinks that the banking crisis will be felt for years. So I'm going to take some of this stuff with a grain of salt for sure. What's good is that, if it is multi years that we're feeling this, it means that we're probably not going to fall off the cliff this week or this month. And that kind of keeps that seasonality theme alive. Um, we had some JOLTS data come out last week. Fell below 10 million for, um, geez, I think the first time since 2020. But again, we're looking at, in my mind, really like peak employment. So, and we're what's up, man? Always looking for like what does the Fed need to see? They need to see a slowing economy. They need to see spend slowing down. Excuse me, in order for a lot of the inflation stuff to come down. So the Fed has that two mandates, right? Keep inflation in check and try to strive for max employment. Uh, You know, I think they're okay on max employment, although employment's been coming down. So it's hard to say. They definitely have not been able to keep inflation in check. So I don't know. I mean, I like Powell. Don't get me wrong, but he's got a tough job ahead of him for sure. Also, a couple notes from some of the other Fed presidents. Bullard, financial conditions have become tighter. This is really all around that banking crisis, quote unquote crisis. Um, I put something out on Twitter not that long ago, and I think it was like a short idea on Roku, one of the trades. I post most of the trade ideas on Twitter. Um, and someone replied in the comments saying, you know, uh, deposits fully insured. I'm like, well, because the logic was credit tightening, and Roku needs a lot of credit lines to do what they do. But deposits insured has nothing to do with credit availability. So just to be sure everybody understands, the credit situation is different than deposits. Totally unrelated. I mean, one's liquidity and yeah, it's just credit availability. If credit conditions do tighten, then spending is going to slow down, which will help inflation, but uh, probably not the greatest thing for employment, that kind of stuff. So keep that in mind as we go through the week. We do have uh, uh, some pretty big economic data coming out this week. And then over the weekend, Good Friday, we did get NFP. Most of the main headlines out there, it was no big surprise, right? So that was the positive note in terms of NFP. A lot of people talking about Goldilocks type NFP. Um, and, we'll see. I think, it wasn't any major surprises. So, yeah, I'll call it Goldilocks for sure. When we look at the market now, right, the market's still today, Monday, digesting all of that NFP data. So, every Monday, always take it with a grain of salt, but especially this Monday, a lot of this price action that I've seen, I'm not expecting it to hold or really take a cue for my directional trading this week. If you're a day trader out there, great. You can, there's usually a lot of volatility in terms of day trading on Monday. Take advantage of that. Um, but overall, I mean, it's not something I'm going to really put a ton of stock in terms of finding my next 2 to 5 week type trades, if that makes sense. And we do have so a couple of headlines: construction struggles, construction workers struggle to find work, and that's more of the employment stuff. And then the big one for me is like, if you guys remember last week, I believe it was, there was a big supply shock. In terms of Saudis and Russia actually cutting production on oil, and then today I started getting these headlines. I got them today. I don't know when they were actually out. or go, hello, man. Um, what I was getting these headlines. A lot of the smaller countries were actually pumping out more oil and helping demand there, or helping production. I'm sorry, so increasing supply. And I grabbed a little chart this morning, so they're real small countries that you don't really notice a whole lot. And I'm highlighting this right now because I think oil will be a big trade this week. I really don't know which direction it's going to go just yet. Remember, Monday, um, take it with a grain of salt, but there's some conflicting headlines for sure, and oil's at a very interesting spot technically. So, personally, I'm kind of thinking straddles, to be honest, but we'll see. So, smaller countries increasing production here is going to weaken or increase supply, and hopefully weaken the price of oil, um, which is what the U.S. wants. But still in that battle zone of like, what? Well, are we going to see some retaliation from the Saudis or Russia in terms of what they're going to do in terms of supply? So we'll see. I think oil is in for a very, very, very volatile week. That's what I can say. In terms of actual economic data, we got a good amount last week. So almost every day we got a little something. So manufacturing PMI came in 46.3 versus 47.5. And when we look at these, and I'm going to run through some of these slides fairly quickly for this coming week. But so what we'll have is like, what's the previous number and then consensus number. And what really moves the markets isn't what the actual is versus the previous. It's what the difference is between the actual number and what consensus was. So if consensus is really high, let's say Jolt's 10.4 million, it actually came in 9.9 million. So a little bit lower. That's probably going to move some markets. And then unemployment rate. So this is where we're saying, so not a huge kind of Goldilocks number, right? So expectations or consensus 3.6%. That's what was priced into the market. 3.5% is where we came in. And remember, a little bit smaller numbers here, typically good for the market, but we're starting to see this other kind of trend where there's a lot of talk about, is bad news going to be bad news? And if bad news does become bad news, or good news is good news, you'll see a bigger reaction, like a knee-jerk reaction, if you will. But when bad news is bad news and you do get one of those big flushes, honestly, that's kind of the sign of one of the bottoms, right? So hopefully, if bad news is bad news and it doesn't really continue to carry, and we can see some little basing action, I'm still constructive overall. I'm still constructive on the mid caps in terms of, hey, what are we going to have in terms of who has the most upside right here? I still say IWM. We do have earnings starting not really this week, but the following week, and we're going to start to see the banks kick off, right? And so KRE, that regional bank sector, is by far and away like the most beat up sector. And if when some of those banks start reporting, they're not as bad as feared. Not that, what's not going to matter for sure is their actual earnings. I don't think that matters at all. It's all going to be about this balance sheets and what they say in terms of their long-term maturity um, holdings. Like, what do they have on the books? So and their liquidity situation. So that's what a lot of the talk is going to be about. Diamond already came out saying, hey, it's going to be, he's got a dire outlook. So I'm not expecting him to really have a ton of uplifting comments for the market. So we'll see. I think this week, it could be a pretty volatile week. We've had very tight trading ranges coming into this week, and we have a huge amount of data coming out as well. So we're going to mark the candles too, by the way, for non-farm payrolls. Remember the non-farm payroll candle, digestion candle. So from um, Friday's close to today's high, or today's high or low, essentially, that's going to be the barometer for the month that I'm going to use in terms of understanding or having an idea of what direction we're going to go. And remember, if you're using that, I want to use like a 2-day close above or below whatever today's high or low is for the month. So that said, non-farm payrolls came in 236 versus 239 expected. Again, right on par. Participation rate almost exactly uh, as expected, as well as average hourly earnings, which are, by the way, coming down a little bit, which should ideally help for a little bit of the spend. So this week, as we go, right? So wholesale inventory is really nothing happening today. Not much happening tomorrow. Tomorrow we get WASD report. So if you've any futures traders trading like grains and things like that, that will move those markets. Not typically equity markets. So nothing for us really to pay attention to. But Wednesday is when the fireworks actually start hitting. So CPI and FOMC minutes. Wednesday, we get CPI out in the pre, and then we get FOMC minutes kind of like midday, which do tend to move the market a little bit. And then Thursday, it's like boom, 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 right? Thursday, we get PPI and jobless claims. And Friday, we get retail sales, which, by the way, hasn't been the biggest market mover, but retail sales in general are usually in like the top, I'd say 4 or 5 things that do move markets. So I think with what's going on where we are, it's definitely something we want to watch out for. But the biggest day of the week by far and away is going to be Wednesday. So just keep an eye out for that. If you're swinging things, this is the day to watch out for sure. So kind of like midweek pivot, if you will. Um, that said, we do have some earnings kicking off this week. We have UNH, which is the biggest component of the Dow, reporting this week. And just a quick recap: last quarter we did 17 beat, 11 misses, and 2 companies meeting expectations, which over the last year is actually pretty bad. What I'd say is that expectations, and what we saw a lot this quarter as well, expectations for earnings deceleration is pretty high. So meaning the market's not expecting a ton of earnings growth. And we'll probably find a lot of situations where i- it's already priced in that they're going to do really bad. And so if you find companies maybe that aren't as bad as expected, we will see some of those outsized moves post earnings. So I believe we get, let's see, LVMH. Yeah, I believe it's LVMH today. Is it today? Oh, it's not on here. April 10th. Oh, Wednesday before the open. LVMH, that's one of those higher end clothing brands, Louis Vuitton and stuff. I'm highlighting that because we saw, I forgot who it was. A couple of the other clothing companies did report last week or so, and we're having these major outsized moves. So that might be one would set the tone for that. We still have Capri that hasn't reported yet, still on watch. And then Friday, uh, looks like it's Friday. Yeah. So Friday we get some of the big ones. So JP Morgan kicks us off. Uh, Earnings season used to start officially with Alcoa because it was like AA was the symbol. But they don't go first anymore. Now the banks kick us off. So I'd say Friday is probably the official kickoff of earnings season. And that happens before the open. We get JP Morgan, then we get United Health, we get Citi, Wells Fargo, PNC, BlackRock, and it just starts going. I mean, it ramps from here. So financials first to go, starting on Friday morning. So again, another piece that will probably move the market, right? Um, Tilray after the close today. I mean, I'm pretty sure that these weed stocks are, are nearing the lows. I don't know. I feel like they're nearing the lows every time I look at them. Um, and yeah, so I'll be watching LVMH. We got some Delta, some insurance companies. Fastenal is actually a pretty good company. That might be an interesting one to watch as well. But anyways, it's a light week this week until we get to Friday, and that's when we start really ramping up. So in terms of actual stuff coming down this week, here's the schedule right now. So Monday, today we have a speech coming out after market, right? Fed President Williams. We have a couple other speeches this week as well as we head into CPI. So I want to keep that in mind. We did get short-term bond auctions, 3 month, 6 month bill, T bills. So just slightly higher. Consumer inflation expectations coming in higher than expected. So again, previous and then actual. And then when I go through these, the time slots here on the left, that's specific. So please adjust for your time zone. We get tomorrow business optimism index, red books like retail sales, and then two Fed speeches post market. And then we get into the meat of what's going on, right? So Wednesday, excuse me, Wednesday really kicks us off with this CPI, right? So CPI data consensus is 2%, 0.2% inflation rate month over month. They're gonna look at the core. So we have what's called the headline number, and then we have a core number. So headline does not include food and energy, things like that, and the core I'm sorry. I had that flipped around. The core does not include food and energy. Headline number, which doesn't say core in front, that's everything altogether. And that's how much the prices of our goods and stuff are actually going up, right? We had PCE the other week. That's how much we're actually spending. And if we are thinking about, how does all this stuff make sense? What do I even do with this data? I think one thing you could look at is when you look at the manufacturing indexes and things like that, that's more like our supply. And then PCE specifically, which is the Fed's main gauge, that's the demand, right? Core inflation and that inflation rate, that's the output. But that's why PCE is actually more important than CPI or even PPI, because that's where the prices are right now. It's a little bit of a backward looking thing. So, um, manufacturing indexes matter. Services sector indexes matter. CPI matters. PCE matters the most. And CPI, PPI, that's kind of like the actual output. So inflation rate year over year, they're looking at 5.2. So I'm going to click on this really quick. The last time we got this, there we go. We were at 6. So we're gonna drop off an 8.5, which that's a pretty big number. Um, Inflation rate month over month. Pull that up really quick. Month over month, we came in last month 0.4%. So if we get another zero point 0.4, they're thinking 0.2%. I don't know if we actually get 0.2%, and we drop off a 8.5%. Yeah, we should drop considerably on the year over year number for sure. Maybe even more than that. We have 1, 2, 3, 4, 5, 6. Wow. 1, 2, 3, 4, 5, 6, 7, 8 months almost of very high. I'm counting these 1, 2, 3, 4, 5, 6, 7, 8 months of 7 plus percent year over year inflation. I mean, that's huge. Okay, so core inflation, they're expecting a little bit lower. And then we do get oil status report uh, as well, right? Kind of like midday. And then FOMC minutes, again, midday. So 11 a.m. Pacific, what is that? It's like 2 p.m. Eastern. Right towards the close, we might get some really kind of knee jerking reaction. So Wednesday, be very light if you're out there trading. This is going to be a very hard day to get direction. You're going to have some definite whipsaw action for sure. I would not put any real stock in what happens on Wednesday. That's what I can see from here. Uh, and out of Google. Yeah, yeah, Google. I like that. So Google, we'll take a look at Google. I would wait a little bit. I think 104.50 maybe. Um, I think that's probably one of the better weekly setups, and again, one that is still definitively undervalued in my mind. So Thursday, Thursday we have some more, right? We get PPI, so CPI first Wednesday, and then we get FOMC minutes Wednesday afternoon, and then we get slapped one more time by PPI Thursday morning, 5:30 a.m. Pacific. So that's in the pre-market, about an hour before the market actually opens, and we get initial jobless claims. So remember, we're looking at PPI, which is Producer Price Index, right? It was pretty flat last time. Looks like negative 0.1%. Let me see this. This is the PPI number. Yeah, we're coming down considerably on producer price index. The thing is here is, are they actually going to bring that down to the consumer, right? What we're seeing for sure right now is we're seeing things like, look, if you look at General Mills, you look at Coke, you look at Pepsi, the consumer staples had a huge week last week. And when they are reporting, they're basically saying, "No, we're not actually passing these whatever savings we get down to the consumers, at least just not yet." And what they're doing too is they they actually start putting less product in, like, your if you ever wonder, like, what how come my box of cereal feels like half the size it used to be? Yeah, it's because they're putting less product in what you're buying also, which is their way of selling the same quantity. They're kind of organic growth, selling the same quantity of items, but making more money on what they're selling. In terms of actual units, they're not selling any more units, right? Everything is staying the same. So they have to find a way to make more with the same quantity of sales, if you will. And then jobless claims. So jobless claims again, it's going to be a big one. Uh, it was. Let's see if this higher or lower. I believe we've been, yeah, tracking about 242. We peaked out on jobless claims here, came down just a little bit post March. So around 200,000 has been the average previously. Let me see. Yeah. Oops. About 200,000 is the general average. So we do want to see that come down a little bit. Well, for a good economy. I don't know. I don't know how the market's actually going to take that. So who knows? And continuing jobless claims creeping up just a little bit on us as well. So, I mean, economy slowing, which we knew. Prices still sticky, which we knew. We got some supply shock last week with the oil constraints, but you know, getting counteracted today with some of those smaller countries. I don't know how much more production some of those smaller countries can actually put out. We're getting a little reversal in the market here right now. Interesting. Man, this is what I'm saying. Monday, you never know. We were looking at Tesla this morning, and Tesla just like gross out of the open. Actually tagged the 200 week moving average. So I'm going to give that to you guys today and just show you what happened on Tesla. Pretty interesting spot for sure, but it's been an interesting spot for a while. Um, and then earnings, seven companies reporting earnings, very small. We don't really start ramping up until next week, but Friday kicks off the banks for earnings this season. Retail sales, we get Friday morning, 5:30 a.m. Pacific, so 8:30 a.m. Eastern. Consensus down 0.4%. So when we look at some of these things, and as we come into earnings season for the retail sector, which I believe is the next one after banks, that's going to kind of play a part. And in terms of the broader market, we've typically been looking for slowing down on the retail sales front, which would be helpful for inflation in general. Retail sales ex autos, so not including autos, month over month, expected negative 0.3%. So expecting down across the board on all these retail sales numbers. What I'd say is, I don't know if the autos are selling a whole lot. I still have this car that I'm trying to sell, by the way. And I went to it's not Carvana, it's like shift.com. And uh 3 or 4 weeks ago, I think, when I first went in to sell it, they gave me an okay offer, but I didn't have some of the paperwork in line. And then I refreshed the quote today or this weekend, and God, I'm telling you, they gave me, I don't what's the percentage? Probably an extra 10 or 15% on the car for the quote. So I'm like, maybe sales are going up, but these prices, um, I just know my personal experience. They're offering me more this week on on this car I've been trying to sell than they were last month. So who knows what's going on over there? I don't know if they're actually selling them or not, or if maybe the car is just, it's kind of rare. Whatever. Who knows? It's one of those CTSVs. So if anybody wants to buy a V, it's for sale. And then consumer sentiment in the morning, Friday morning. So again, Friday morning, a little bit of a whipsaw. So just similar to Wednesday, we have a couple different things coming out random times of the day. And then Friday morning, one more time, we're gonna have an initial reaction and put these kind of like alarms on your clock, if you will. 7 a.m. Pacific, 10 a.m. Eastern. This will move the market on Friday morning. It always does. If you're looking for Friday trades, wait till consumer sentiment comes out. You'll have a little bit better direction. Cool. So let's get into it. All right. So here's my first view. So I'm going to go generally speaking across the board. This is my view right now. So you have a spot SPY, the Qs, diamonds, and IWM on the top row, straight across. Right on the bottom here, these are my barometer readings. Right now, I have TLT. You can use like ZN for the 10-year note futures. This is probably the most important futures chart, actually, in general. Like if you do trade futures, GC is gold futures, CL crude futures, and Dixie for the dollar right here. Um, you can do. I've been using this 2-year bond. All right, so short term rates. Here you go. Right, so this is the yield. USO2 Y is the yield. So let's hit really quick SPY today. This orange box, these are an average week's range. This blue line that we're running into, just so you know, this is an anchored VWAP, and I have two of them on my screen. It's an anchored VWAP from the all-time high right up here. So meaning if you were buying in here, your average value, right, average price, we're sitting on it right now. If you bought at the COVID low, right, we're right here. Um, that anchor VWAP is right around 386, which we happen to bounce and aligned with some of this prior downtrend as well. So I think, honestly, right now, I think we're kind of stuck. We've been kind of stuck. So we're in this really important range. And I'm going to zoom back in here on a 30. So here's the deal, right? So this is February's NFP high. I'm going to candle. I'm going to duplicate this. And we are in April. So this is going to be April NFP high. And again, just so you know, right? So this is February NFP high right here. Uh, that was probably, and the day after, if you counted, the day after or whatever, like that was basically the high for February. So it was very simple. Like, hey, look, once we start trading below this, we're coming back down. Here was the low of February's NFP candle. And look, it's the same thing. Acts as resistance right there. You could do the same thing for January, right? So January NFP high, NFP low, this big old candle. Yeah, that's one day. You get a couple days clean above, and then hey, look, we're definitively going higher. That's how you use these, right? So right now, this high 409.49. Oh, that's a big number. Yeah, so this is Friday high. Is this Friday? I'm just gonna use this pre-market level, or should I use ES? This might be better. But Friday, Good Friday, we were open for just a little bit. Let's get this number right here. This was 41.46, 75 on ES futures. So, and right now the low looks to be 40.98, 75. So for now, in between this range, oh, this is a big candle. We must be moving. I don't think we are moving. Did we get some news? What did I miss? Mm, no, nothing coming out. This is just price action. They might be looking at this pivot right here, right there. But anyways, definitively we'd be going higher for the month if we can hold 41.46 on ES and SPY. That would be that pre-market, basically that pre-market high from today. Um, Yeah. And for now, this is definitively right in that same range. So this morning's opening range low, looks like we just bounced just above it. And that would be this is likely. I don't know. I don't know for sure. Um, for right now, this looks like it is April NFP low. We'll see. Whatever the low of the day is, we're gonna mark that. and keep that on your charts. That's going to be super important. Same thing with the Qs. If that's the low, let's see an average week's range, taking this orange box. If that's the low, that would take us to 418.05 on SPY. And you guys got to know this 420 level is the massive, massive level on SPY. So we have a ton of consolidation right here. You want to be very concerned about. It kind of comes in. You can see it pretty clean. So all of this, a ton of overhead supply. So it could take us to just below that on an average week's range, which would tag this prior high, something similar. Um, and then this little, we call this in the server at least, we call this like Death Valley. So if you see where SPY is consolidating, had consolidated right here. This is like an epic consolidation. Like I think we measured this about average 14 days. Whenever SPY hits this box between 417 and 407, epic consolidation, epic consolidation, epic consolidation. We are, let me get into a smaller view. We are right back into that box. So this box is playing like your magnet range right now. So and that would be the weekly range, which honestly 417 would be the high end. I think that makes perfect sense. I really wouldn't press by any higher than that. But as long as it's in this Death Valley box, it's a very clean range. Also, want to see this bottom has held for a little bit. So as long as it's not pressing below 404, below 404, we have a quick flush to like 402. Below 402, it's like look out below, right? And then we start getting to like 390s again, which hopefully we don't see. All right, let me just check this. All right, auto sales. Let me see. Auto sales getting crushed. Yeah, tax season. Oh, speaking of tax season, yeah, that's a biggie, right? So tax season was pushed out this year. So people are starting to file now. And normally uh, tax season is rough, right? So what happens in taxes, and I'm going to take a quick minute to talk about this because I do think it's really important. If you have any winners, and this is usually like we'll call it spring cleaning for the portfolio. If you have any winners that are um, even if they're really profitable and good companies, it's not going to matter if you're up on a position or if people are up on a position. What you'll start to see is like you'll see some weird selling so that people can pay for taxes, right? And I remember, when I was new, I'd look at this and I'm like, these are great companies. They're still undervalued. Why are they selling off? And it like they kept selling off during all of taxes. I'm like, why are they using Amazon as their personal ATM? I'm like, well, hello. That's what happens. So look at your portfolio. If you have anything that's not super high quality right now, I mean, like high quality, high free cash flow generating, um, and is green, this is probably the time of year to take a moment, review those, and see where can I trim the fat, right? So what I'd say is focus on free cash flow. Uh, I don't. I'm gonna do another video on stuff where like you can actually chart free cash flow on a stock chart, and you can see if it's tracking like where it usually trades based on its free cash flow trajectory. I will say Google is still very low in comparison to where it historically trades, charted against free cash flow. So it's still a lot of upside on that one, and that'll definitely be one that we're looking at this week. Um, I'm gonna hop over straight to IWM. This is a nice little basing formation right now. So this prior right here, this is March NFP, and we are holding March NFP low right now. So as long as that holds, that would be ideal. Is that the right candle? Yeah, it is. And this is March NFP high. All right. So we are getting sucked right back into this range here. Again, IWM in terms of who has the most room to the upside. In my opinion, definitely this guy right here, very well defended, at least at the moment. And if you pull this all the way back to like way back, you can grab this is a August 2018 high right there, like a pivot high. This is where it's been bouncing this entire time, right? So this is how critical this level is. Been defended, was prior resistance, now acting like support, and has been defending. The only thing I'd say is like I don't like to see it get defended this many times. um, so we'll see. I think this is a lot of regional bank exposure in this index, so it's going to be a tough one. But with financials coming up first on deck, if there's more better than feared than worse than feared type of reports, uh, that would be really the catalyst for this guy to start moving. And again, it's just a trade. Oh yeah, we are moving on these indices. I must have missed something. XOM. All right. Yep, Scott, we will take a look at XOM. If you guys know what's happening out there in terms of the headlines, let me know. That's an interesting one. By the way, WBD is a small position for me. I like this a lot. These guys own HBO Max, and they got that good headline on opening that Harry Potter TV series. Um, Decent reaction. They own Game of Thrones. Um, they own DC also. So a ton of IP that could be had, like that's not really being taken advantage on this company right here, and very, like very underpriced, for, in my opinion. Um, so Exxon, huge news. I didn't even get that on the headlines today. So Exxon, I think it's Exxon, right? Exxon announcing plans, I believe, to acquire, yeah, preliminary talks to acquire Pioneer Resources, PXD. So PXD was a big one today. Market mover, big gap up straight into that 200-day moving average right here. So right now I have a monthly chart on the bottom left, weekly, daily, and then I'm using a 30-minute at the moment. Um, this is fine actually for this view. Uh, so I don't have the uh, details on that in terms of like what the price is, but keep an eye on that for sure. And then Exxon. So here's what happens when somebody puts out a note like, "Hey, we're going to acquire someone." The market will initially, um, typically the move is lower, and that's because whatever the market thinks they're going to pay for that company, that has to kind of come out of the books in terms of, okay, you don't have this cash on hand anymore. But then I just nailed that, Google. Yeah, but then what they do is they're like, well, how much future growth are you going to get out of this acquisition? And the market starts to digest that and start to price that in, right? So right now, Exxon, we do have this big gap here. I don't know if that's an earnings gap or what. It's not. I don't know what that headline was. I think that was the production increase or production cuts. Exxon had that huge gap over the weekend. So there is this little gap to fill. I think Exxon, this is high and tight. What we typically say is like, hey, look, if you're trading a gap here, the half gap on this guy has held, which would be 113 half gap, meaning from the close to the high up here. That half gap is held more or less. And as long as this holds, you should see some continuation, and your stop is going to be below that half gap at one call it 112.50. But for all intents and purposes, it actually looks pretty bullish, like it would continue to the upside, unless you get below that 112.50 level. So I do like this for continuation. Remember, we get oil status report on Wednesdays, so that might be a Wednesday mover for now, or a back half of the day type mover. But I like the bounce this morning. Looked like it was going. It needs to break. At the moment, it needs to break 117.19 to definitively say, okay, it's continuing higher. Um, Cat. All right. Motion is requesting cat CAT. Ooh, nice bounce off the 200-day. Here's the thing with cat. So you've been struggling in cat because the rotation is when we're in a deflationary environment, which in my mind we are. Um, you want to be short cyclicals. So what's a cyclical? Cyclicals like companies that need a strong economy to do well. Cat being like one of the primary drivers there. Um, So if the if the farming sector is not doing that great, then Cat's not typically selling a lot of stuff, and the market will front run a lot of that. So you saw this big reaction here. Okay, so deflation, kind of trade essentially, short cyclicals. That's what you want to be. So right now, Cat is coming in on that 200-day moving average. If you didn't know, that's the fundamental stuff going on behind that. Um, and when do they have earnings? So they have earnings coming up on at the end of the month. So you have a little bit of this pre-earnings scare. Whenever anything gets near its 200 day, it gets real choppy, and you can see exactly that right here. So defended its 200 day uh, mid March, and then again late March, and had broken down below its 200 day here. I hate trading around the 200 days right now. What I'd say is like if this guy gets over 217, it should fill this fair value gap all the way up here, but that's a short right when you hit it, right? So you have a clear fair value gap 229. If you because it's coming off of its 200 day after breaking through, it would likely let me throw a 50-day on here. Yeah, 50-day is at 220. Um, I can also I'm just gonna take a look at this really quick and let me change this to a 50 week just to see where that would land. Yeah, 50 week and the 200 day are right around the same spot. Well, like really right around the same spot. Yeah, so be really careful. So those two are pretty strong support. So probably bounce up here, but I would cut this here. Your 50-day is going to be a little bit of resistance right around that 220, but above 220, you should slingshot right into that fair value gap, and then trade over from there. But cautious on that one, just because it's going to be super jerky on a around that 200-day moving average. But that's a good trade setup from a day trading perspective, and like overnight swing trade also. You be all clear over 220, 28 to me. Cool. Um, so we had one request this morning was Target. Ooh, Target. I was saying to watch out for that 200-week moving average. Looks like we are cracking through it right now. So momentum here. So 50-day and 200-day are this gray and red lines right here. Let me get these guys out of here. These two little lines. That purple line is a 200-week moving average, which is typically stronger than your 200-day. And you should, in this case, probably see this up to 173, and then maybe come back down to retest this. But this is looking pretty decent. And yeah, targets based quite a bit. I'm gonna throw a quick channel on here just in case. Oops. See, yeah, you're crossing over the midsection of this channel right there. So you got a little bit of momentum. Um, Probably trading just to this 172 as your first stop, and then see what it does from there. But whenever you get all these little moving averages real tight like that, and then start spreading, expanding, that's usually when you get a lot of momentum. That's a big candle on target. So um, earnings towards the end of May, you might have a nice little setup here for a. You might have a nice little setup here for potential. Let's see, I can't really get anything clean. Yeah, I just got to call this right around 173. Nothing else super major. That's a nice little higher low break of structure through a critical level. This could this could have some legs with some catalysts, with the right catalyst, especially with retail sales in the back half of the week. So right now, this one's looking a lot better than it did earlier. Monthly looking squeezy, weekly looking squeezy, daily definitely potential to squeeze. 30-minute is squeezing. Yeah, right over that 167. That's the crack. 167.90. Yeah, he's got a good trade on his hand. NVIDIA. All right, cool. Angels wants to do NVIDIA. So NVIDIA's super topped out recently and had this huge. I've been like, do I want to short Nvidia? Like, holy hell, this thing is crazy strong. And there's so many reasons on a fundamental level to be like, oh, this is way overdone. But let's take that aside for a second. Being overvalued from a fundamental perspective is very similar to being overbought, right? Like you can be overvalued and overbought for forever, and it doesn't necessarily mean anything. And yeah, fundamentally, Nvidia could have a ton. Um, like I would say Nvidia has a lot of upside potential. So I don't want to get in the way of shorting this personally, but just for the purposes of this exercise, we will do a couple quick levels. So I'm going to use a 30-minute chart right here. We know this is a very clear uptrend. Um, let's do this. I'm going to take this daily, make sure this is synced right here. And I'm going to do, actually, I'm going to do the same thing. I'm just going to have a trend, right? So we are bouncing right off the top of the middle of this channel on the daily. This channel is just pretty basic. I'm pretty sure this is just a 1 by 2 standard deviation setting. Oop, 3. Let's do it 2 by 2 at most. 2 by 2. Yeah, you'll see where this kind of peaks out right at the top of that channel, bottoms out there. Yeah, okay. I like this. So right now, this is going up clearly on the monthly. So what I would say is if you're looking for a swing trade on a video, which I'm assuming you are, the highest that you can go from a technical perspective, just candlestick. This is your max target for April, and that's 289.46. That's your target for the upside, and that target really only kicks in as long as we're holding above 280, right? So if we're over 280, you can target 289.46. That is, I mean, that's as clean as it gets from a candlestick perspective. That's your target right there. If it's holding up above that, okay, you can go to the next one, and that's at 307.11. It's just as clean and simple as that. Um, Monthly candle. So those are big pivots. Um, on this guy right here, you're very close. 289. That's your 289.46. I'm just gonna mark this consolidation here. So this is that kind of like prior support. It's very limited support. Um, and then I'm just going to start zooming in. I'm going to sync this. That's already synced. That's the weekly. And then as we go into the daily, and I'm just drilling down, I want to have all of these, at the same time in my view. We got another one uh, right around, right around that 268. Just going to put this one right here. So 268, that looks like where we bounced up off of. Um, and from a daily perspective, I'm going to grab this. I don't know what you want to call shooting star. I forgot gravestone type of doji. And I'm going to grab the bottom of that candle right there. We're right there. Technically, it's the low before the last high. So I'm going to call this that low, but right in this 272 level also. Those are going to be important if I make this an hourly and I zoom in over there. So I have to go pretty far back, but this is what we're looking for. This is I'm going to call this a fair value gap. 279.80. It's not really because it filled right here. But this little section is what you have to really pay attention to. If I do it this way, just drag this all the way across. This is your supply, right? So your overhead supply here on a video, prior support there, right? So you're coming into it. This is a tough one for me to trade, man. I honestly, I think like you could just day trade this. You had a clean trigger this morning from breaking prior day's high, and then this prior fair value gap looks like it's a new fair value gap also. So I would be really cautious around 278, like really cautious. I'm gonna even mark this again. 270, yeah, about 278 is where you're gonna have run into some serious resistance. And just know, like, hey, if you're gonna be a bull, you're looking. What are the bears gonna say? What are they looking for? And the bears are gonna be looking right there. Where is my? The bears are gonna be looking right there for a nice little head and shoulders. If you're a bear, that's what you're waiting for, also. So wait for that. Um, and you want to see something like into it, reject, defend, and then a lower high like that. And so you would take a short trade after a second lower high, and that prior high would be your stop, just like that. And this is going to be your kind of support short term. I can't swing trade this thing. It's just too wild, right? Otherwise, we'll take a fib intraday. And that, yeah, so that 50% right there is about that pre-market or post-market consolidation from Thursday. So that's going to be your weekly support right there at 270 on Nvidia. I could not be thinking big short unless we're breaking below these things. And there's this massive fair value gap down here, right? So on Nvidia, for me, I'm being super patient. Check this out, right? So right around 257.34, that's the big one to me right here. So if we break this, then and only then we have this big level to fill. That'll be a fat day trade right down to this fair value gap, which would be right about there. I say day trade. It'll be a quick and dirty, but look, that's like $15. I can be super patient on that guy, and I'd be looking for a breakdown, rejection right off that 257.08 for the real trade on Nvidia. That's the safest trade that you have to me on Nvidia, but you're a ways away from it. Thoughts on Costco? Let's take a look. Ooh, so Costco, I mean, it's good. It's a good company. They're just decelerating. So that was the note, right? Like decelerating Costco for sure. Technically, I mean, technically, you have a nice fair value gap. Costco, I don't typically trade. Let me just take a look at the chain, just because it's got a like disgusting bid ask spreads. It's not horrible right now. Looks like you got a lot of these 500 calls going out. A ton of these 500 calls for today for this Friday. Sitting at about a buck 59. Looks about 2,800 volume on Costco, which would align right around that 200-day moving average and this fair value gap, which I do think that could technically fill. 14,000 calls to 9,000 puts. Yeah, that makes sense. And most of them, you know, I'm looking at this chain. It looks like I'm seeing probably investors. I see a lot of selling of the 480 calls for April 28th going out. That makes sense. If I own the stock, I'll be looking at that. Um, and then some speculators also looking at those short-term contracts, and there's no time on that. So the very short-term contracts for that kind of fair value gap fill, which your trigger long would have been right here. So that trade's kind of like already in play, and you got to be super cautious of like your basic fibs, right? So that's your 6.5 retrace. You have a kind of wick right here. Your best value short, it's going to be around that 490 something. Um, but as long as it's continuing higher, you're okay, but you're stretching it right now, continuing. Otherwise, if you get a bounce off this 47, then I think you could take that trade short term. They're very short term trades. But yeah, a lot of that short 480 calls looks like about 300 sold this morning, right around 1,500 bucks a piece. So that would give them a break even. If they sold a 480 call, they own the shares, that would give them an exit, and they collected 15 bucks a piece. That would give them an exit around 495. So they're trading for the same thing also. If that makes sense. They break even at 495, and they would probably cover above or let it get called away. So all of the above trading for that same thing. All right. Do we have anything else? Costco, Nvidia, Google called it. Let's do this Google. So Google Is with the L. That's the most liquid one. So GOOGL. Check this weekly chart out. So Google weekly chart, amazing chart, right? So I like this consolidation here. Uh, this is the level that, to me, if it's above, it's going to be okay. We're completely in breakout mode. We're holding happily above 109. If we get above 109 towards the back half of this week, we are breaking out, and then you have a big target from 109. Let's see. You have we're just going to grab the tops of these candles 111, 116, and it gets bigger from there. So you start accelerating over 111, 116, and then 122 would be your main one. But let's do this. Let's take this. That was a weekly. This is monthly. So two up on the month continuing. Looking for a squeeze here on Google. From a free cash flow perspective, these things are at a massive discount to where they historically trade. And then let's take a look at the daily. So daily, here's what I'm going to do. So you bounce right off this 200-day moving average, which, by the way, aligns with, I don't have it on this chart. If I just took this top right here and tagged it right to that top right there, we basically got a bounce right off the top of that trend line on this, again, 50 or 200-day, 200-week moving average, really tight together. This is it's a 20-day. This orange one is a 20-week. So we're above all the main and major moving averages here. I liked this. So if I took a weekly candle move and I just take a quick fib from the bottom of last week to the top of last week, that gives me a 50% retracement right at 105.61, 105.50, which is why I was looking at Google this morning for that kind of bounce. And if I look at this on a very short term view, that's about where we started to bounce right there. So I like this as long as it's holding here from just a fib retracement perspective a lot. If I get another opportunity down here at 104, I'll add. and so this is your volume profile. Major ads 103. I mean, I'm just adding. I just don't know. I'm just adding this equity. I wanted to get it sized up when it was like around 90. Selling puts, buying equity around 90. Um, and for a minute I was like, well, I don't want to mess with uh, my cost basis, but who cares, right? That doesn't matter. What matters is where this is going, um, not your cost basis or anything like that. So to me, this is super quality tech. This is where I want to be. Um, one of a few spots that I definitely want to be. So cool. And again, this weekly setup, I mean, does it really get any better? I don't think so. Let me just sync this. Yeah, here's the weekly. I can even tie it right there. I mean, see how this lines up just so perfectly, however I do it. But yeah, just kind of wick down to the top of that, right in between. I mean, this is now massive. Um, with these two moving averages here, this is massive support. So I, I like it. I love it. I want more. I just don't know if I have enough. That's one thing. Anyways, yeah, very happy with Google, and I think it's got a lot of room to the upside. So long term, this is investment to me, like long term, adding, if you will. What if I take the monthly candles? Yeah, monthly's good. Even if I monthly's really good. Looks a little squeezy. Weekly's decent. Cool. I said I'd look at Tesla this morning, right? Tesla had funky headlines. So small recall. Um, it, yeah, it's a wild one. And some other opening manufacturing. Or what am I talking about? Hello, new battery. Um, Geez, I have a brain fart right now. You guys save me. All right. So this one is I think is important. So this is a Tesla monthly chart. And here's your levels, right? So super critical support. This is your baseline. So 168 is the top of this guy. This is remember a monthly chart. So in between these two, this is where I'm looking for a bounce, lining up with that 200 week moving average, which is the purple line, 200-day moving average, 217. If I zoom in here to the weekly, we started to get a little sketchy. If the weekly is below 176.35, then yeah, it's going lower and it's probably going to fill down to this 167. But until it's there, we're not doing that. And this morning, it bounced right off this 200 week moving average, which is super crucial, right? Tesla, just so you know, how does it react right around these levels? I mean, you rarely get it around that 200 week moving average, but yeah, it was big flush below, big bounce up off of, defended here. 200-week moving average is in an uptrend heading up towards its 200-day. Right now, this is a very large range. Honestly, I would say this range is like 215 to like 170 on Tesla from a range bound perspective. But it is range bound. It's just a very large range. And if you remember, like NVIDIA was like that for a little while too. Um, Overhead supply, we have resistance at that 199. And really, it's going to be 202 is like the breakout level. This is 206. For whatever reason, it was like 202 is getting smacked around. And we also know that at 195, if you trade Tesla regularly, you know, 195 is there it is, 195, I think it's 25, super critical level. It always moves wild right around that level. So 195 to, I'm going to call this 202, 50, I believe it is something like that. This is your overhead supply. And look at this volume shelf. That's a 195. 195, massive volume peak here. Massive. So we got defended right here at that 200 week. Um, and this is why that 195 so critical. Need to see it hold above that. But it typically it bounces right off this 180 like all the time. So here's your 180, 180. So I don't know, like whenever it breaks below 195, it's been a pretty clean trade to 190, you know, and you could probably carry it down to 185, 180 below that. But it's been a pretty stable one. I think right now we're basing it's been in consolidation. I think it's ready to go. Just don't know which way just yet. If it does break below that 167 though, or get a daily close below that 167, yeah, it's not going to be fun. At that point, we're looking probably at like a probably looking at like a fib retrace, and then pulling from this low to high 160 into that 150 probably range if we do trade below that or get it like 2 day close below that. So caution for now, defending. I'm happy. Cool. I think that's it. If you guys don't have anything else, we're a little bit over our time. Appreciate you guys hanging out. I think the biggest one to watch this week, Google. If you didn't know, a huge amount of 110 calls going out for this week. For a lotto, I kind of like it, right? I mean, 110 sitting at 33. I grabbed a little bit. I also have 108s as well. A lot of 108s going out too. Sitting at 79 right now. And they're heavy, 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 heavy across the board. This is a massive setup. Don't get fooled by this little pullback. This is still really strong, sitting at that 105, just base, reclaiming this prior breakout level. And again, when we're looking at all of these moving averages, 200 day, 200 week, 50 day, really close and tight. That's the best setup that you can get. That's when we get not the best, but like that's the main setup that we want to see. This is a 20 week. I mean, all the moving averages are right here. And so once they start expanding, we're going to get a massive range expansion. And Google, of all of them, is ready to roll in my mind. If we compare this to like a Microsoft chart, like this was the setup that it's coming out of. Very similar, clean downtrend. You got the bounce right up off of it. So I expect a very similar move that Microsoft had right here. Big fat candle. I expect Google. I expect the exact same out of Google in the next week and a half, 2 weeks. So that would put you right on like 120. And I don't want to miss out. Like I missed this Microsoft one. So it's the exact same setup. I mean, exact same setup. But all right, guys. I'll see you on the next one. I'll see you on the servers. If you're thinking about hopping in and you're thinking about maybe checking out our group, don't forget to, we have 20% off. Go to the link on the top left, biggrains.com/links, 20% off whatever package is monthly, quarterly, 6 months, what have you. Um, really don't ever run sales. So if you want to extend, by all means, extend. You get the discount, and I'll see you guys in there. Cool. Appreciate everyone. And until next week, adios.